Hey, this is Matt from InvestiQuant. Today is Tuesday, October 6th, 2020. And this morning we saw the markets gap up. They filled the gap and have gone sideways and trading a little bit higher here into the afternoon session. But bottom line is the majority of the markets have had a fairly quiet session that are trading a little bit higher in the afternoon. So what I want to do this afternoon is take a look at that type of price action. I'm looking here specifically at the S&P in the top left chart where you gap up within the prior day range, you fill the gap, and you kind of just go sideways back and forth here for the majority of the day. And we've started to push up above the prior day high. So I'm going to take kind of those same key aspects and build a study here and discover, and we'll do it using all four instruments and a time-based entry that enters the market at 3 p.m. Eastern Time and exits at the close of regular trading hours, which is 4:15 p.m. Eastern Time. For the opening filters, I'm going to use a different opening filter than I usually do. I'm going to use a pivot zone because I think the pivot zone will do a good job for the study of kind of capturing the idea of a market where it may be going a little bit higher, but it's not going significantly higher. So what I'm going to do is I'm going to say that the open was between the pivot point and resistance 1. So I've got that selected here, and I'm going to say that it was a gap up as well. Then I'm going to go into the post-open filters, and I'm going to say that the range is light. And the way I'm going to do it is I'm going to say that the intraday range size as a percent of the 5-day ATR is less than 65% of the 5-day ATR. So currently the S&P has about 24 points of range intraday. Our current 5-day ATR is about 50 points. So we're about half right now, but I'm just going to open it up just a little bit, capture a few more samples while still capturing the idea of the range being lighter. And then I'm going to go into this intraday close versus daily levels. I'm going to add a couple filters from here just to sum up the rest of the price action. And that's going to be we're trading higher than the prior day high. So if I hit equals next to above the prior day high, but I'm also going to come back to that pivot zone, and I'm going to say we're still within the same pivot zone that we opened within. So at 3 p.m., trading between the pivot point and R1. Those values in the ES are currently 34.0850 on the resistance 1, so we are currently trading below that. We're not too far away from it, but we are currently trading below that. And the pivot point is at 33.8450. So we are trading within that zone. That's the same zone that we opened within. So that's kind of capturing price action that hasn't moved too much. And then lastly, I'm going to go into indicators and put us in a similar bullish environment above a 10 and above a 200-day simple moving average, and click view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you gap up between the pivot point and the resistance 1, so in that zone. At 3 p.m., you're still trading within that zone, but you are trading above the prior day high. And the range is light on the session. I've got it using less than 65% of the 5-day ATR. And this is taking place within a bullish environment defined as above a 10 and 200-day moving average. Historically, the S&P has 60 samples dating back to 2003. The NASDAQ has 74 samples, the Dow 57, and the Russell 55. And looking at the win rates on these for going long at 3 p.m. and exiting at the close, it looks like the S&P has been a little bit favorable here, 60% winners. 59%, so very similar number there in the NASDAQ. The Dow is a bit more neutral at about 53%, and the Russell, similar to the S&P and the NASDAQ, coming in at 58% winners for closing above that 3 p.m. price. And if we look at average win to average loss, fairly similar on both sides here for the S&P. The average loss is a little bit bigger in the NASDAQ. It's pretty similar in the Dow, and the average win is a little bit bigger in the Russell. There's no major differences between these. The ones that are skewed in one way or the other are just slightly skewed. And lastly, let's take a look at the results distribution for the S&P. For the results distribution, if you're not familiar with this chart, the way it is laid out is you have sample sizes plotted on the vertical axis. So we've got trade counts. The taller the bars, the more samples that it has historically. And then on the horizontal axis, we've got the P&L in dollars based upon trading one contract of the ES. And the farther to the extremes, the bigger the moves. So in this example, we do not see any moves or any bars over here on these extreme large moves on either side. What we are seeing is a clustering of bars right around zero. So these are smaller wins and losses. The average trade is marked right here, which is this small winning trade, about 2 points in the ES, and the standard deviation is right next to it in this blue highlighted section. So historically, this has a very small win or loss happening frequently with this scenario, and the winners have happened a little bit more often. There has not been outliers taking place with this pattern. So perhaps a quiet afternoon into the close in this scenario. So hopefully you found that helpful. Good luck, and we will see you next time.